All right. Hey, everybody. Let's get started. Thank you for signing up for this webinar. Whether you're just getting started on Amazon or already have a functional business, this lecture will really help you zero in on what's needed to become a master of your financials as an Amazon merchant. And financial management is super key to stay on top of because financials are like a central nervous system of any business. And if you don't keep it healthy, you're dramatically increasing the probability of failure. So, financial management is not a panacea. It's not going to solve all your problems and ensure that you build a massive, profitable business, but it will increase your probability of succeeding. And if you don't do it right, it will substantially decrease your odds of success as well. So, you want to kind of stay on top of it. One thing I wanted to mention before diving in is that I'm the founder of a software product called Sellerscale that helps Amazon sellers stay on top of their financials and make better business decisions. So, full disclosure, I'm the founder CEO of this company, and it's kind of, this webinar is brought to you by Sellerscale. And at the end of the webinar, if you like some of the insights and systems that we talk about throughout this deck, then feel free to sign up for a free trial and give our product a spin. Let me know what you think about it. I'd love to hear any feedback from you guys, even if you don't end up being our customers. So with that out of the way, let's get down to business. So what I'll go ahead and start off with is a few words about my background. Obviously, financial management on Amazon is a pretty specific domain, and it's important to understand the credentials of whomever you're going to listen to and potentially use their insights to make important decisions about your business. So my name is Paul, and especially given the fact that there are a lot of gurus and coaches in the Amazon space peddling various training courses and products who don't really have the requisite expertise in the specific domain that they're talking about. So very important stuff to kind of learn about the credentials of whomever you're listening to. So my name is Paul Faguet. I'm the founder and CEO of Sellerscale, and it's a managerial accounting platform for Amazon sellers. We're going to talk about the concept of managerial accounting throughout this deck, so don't worry if you haven't heard it before, but it's really central to the whole idea of financial management on Amazon. So in terms of my background, I launched Uber in Russia back in 2013 as their #1 employee in the region. It was a pretty crazy adventure without getting too sidetracked. It was at times dangerous enough where I had to walk around with bodyguards, which is kind of funny thinking back to it now, but wasn't funny back then. But at the end of the day, the business was extremely successful and was sold for over $1 billion only 3 years after I launched it. After Uber, I was director of operations at a 180-person operations team at the largest online travel company in Eastern Europe. After that, I worked on the sales operations team at one of the most rapidly growing technology companies in Los Angeles called ServiceTitan. And back in 2016, I got into the Amazon FBA space and decided to build a business. And over the following year or year and a half, managed to build a profitable operation that at peak was doing about $500,000 per year in revenue run rate. So not huge, but definitely sufficient scale to kind of introduce me to a lot of the complexity involved in managing an Amazon business, especially the financials, which is what we're going to talk about. And actually, during that time, I started creating some tools for myself in Excel to help me understand the numbers behind the business. And over time, I found them to be so useful that I decided to turn them into a product, which is today Sellerscale. I also used a bunch of other existing financial apps on the market, and they all kind of sucked. So I wanted to build a best-in-class software product to help sellers like myself, track their business performance and manage their financials. And last but not least, I have an MBA from Cornell University, and a bachelor's in finance from Cal State LA. So lots of experience with corporate finance, accounting, analytics, and business in general. So hopefully this kind of inspires some trust in my ability to talk about this stuff. So quick cautionary story before I dive into this to hopefully give you some context for why this stuff is important. So my first product was a meditation pillow. It's a pillow that you put on the floor and sit on it to keep your spine straight when you're meditating, essentially. So I really liked the niche, and that's why I picked this product as my first kind of entry point into the Amazon game. And I did not really dig into its financials or unit economics, which is a very, very important concept that we're going to talk about at length in the following slides. But I did not really do my due diligence ahead of time. And when the product launched, turned out to have super high costs, was oversized, heavy, and then on the other end, my competitors were pricing very aggressively, so I didn't have much pricing power, and the product wasn't differentiated enough to justify a higher price point. So at the end of the day, I lost thousands of dollars because I did not have enough capital essentially to invest continuously into scaling this product and do a lot of advertising and then have a healthy profit margin that would kind of offset these initial investments over time. So lost a lot of money, and the point here is it's much cheaper to do your due diligence ahead of time. Make sure to gather all of the information that you have access to. You're never going to have perfect information, but you can really get access to a lot of the critical data points that define a product's profitability. You can integrate it in Excel or in our product Sellerscale and figure out what the profitability potential of the product is before committing your capital to it. So stick with me, and in less than an hour, you will learn a couple of mission-critical things about financials on Amazon, things that will help you be smarter than your competition and maximize the odds of building a thriving business. So first, we're going to learn how to understand your current profitability of the business as a whole, as well as how this profitability profile might evolve in the future, because profitability is a very dynamic thing. It literally changes every day as a function of a lot of different variables, and you really want to understand how this what defines your profitability and what it depends on. So we're going to talk about that. Then we're going to look at an advanced process for ensuring that you only launch products with truly compelling profitability potential, at least relatively speaking. So if you analyze a bunch of different products, you will be able to tell which ones have healthier unit economics. So probably less than 5% of sellers use this kind of analysis, and you're going to have a big advantage on this front if you adopt it. Then we're going to talk about some of the most common financial management pitfalls and strategies for avoiding them. And later we will dive into a framework called Managerial Accounting that will enable you to stay on top of your financials over the long run with minimal effort. And at the end of the webinar, I'm going to share some useful resources with you guys, 2 helpful spreadsheets that will help you calculate unit economics unless you decide to use Sellerscale for that. You figure out your cash flow and kind of plan it out to avoid potential problems. I'm also going to throw in a free ebook and also share a special offer for our product with all of you guys at the end of this deck. So stick around. All right, so the thought I wanted to start off with is that an Amazon business is essentially a cash generation machine at a very high level. So you send a bunch of cash to your supplier, they manufacture the product and deliver it to Amazon's fulfillment centers, and Amazon then helps you convert that inventory back into cash and disburses that capital back to you twice a month over a set number of months, essentially. So, and the cycle is pretty complex. You need to understand how it works. Otherwise, you're really putting your entire endeavor at risk. So, but again, at a high level, you're putting in a bunch of cash. You're putting capital to work, and then over time, hoping to recover that capital, along with some additional, money on top of that to basically generate a financial return that will make this Amazon business a worthwhile investment for you, because it's simply an investment. So you keep cycling your cash through this machine, and if you don't understand how it works, in all likelihood, you will fail, unless you're super lucky, but we don't want to rely on luck, as much as we can. So notice that I'm not talking about all the other aspects of operating an Amazon business, your marketing, your keyword optimization, review generation, etc. Those are all the activities that essentially improve the efficiency of your cash cycle, efficiency and sort of scale. But unless you understand how the underlying cycle works to begin with, you're not going to know what inputs affect what outputs, what you need to focus on, and whether your business is worth continuing to invest into. And the thing that's important to appreciate is that accounting on Amazon, the mechanics of that cash cycle we mentioned, is actually quite difficult. So first, you have a number of complex fees. For instance, storage fees that depend on product size, age of inventory, time of year, or refund fees that are also not very straightforward, fulfillment fees that vary by category. And it's hard to keep track of all those data points and kind of integrate them to understand how they define the profitability of your product and the business as a whole. Second, Amazon's native reports are confusing, disjointed. There are too many of them. Sometimes they're not up to date, and it takes a lot of work to integrate them in Excel, make sure you don't have any errors, and kind of manually update all of that data regularly to get timely analytics that you can use to inform your business strategy. Another source of complexity is the fact that Amazon pays out twice a month. You can't easily tie those payouts back to specific products or investments. And this becomes a problem because you really want to understand what to double down on, which products to phase out, where to really focus to improve your unit economics for any given SKU. And the fact that you're getting these disjointed, payouts that are hard to connect to the initial investment that drove that cash inflow, it just makes the whole system more complex. And then finally, long lead times complicate cash flow management. So you send thousands of dollars to your supplier, and then a couple of months later, your product is at a fulfillment center, and you're starting to generate some of that cash inflows, some of that cash back into your bank account, and the time between your initial investment and those incremental cash inflows, it really makes it hard to plan cash flow, ensure you're staying out of sort of stock out situations, but also optimizing the use of your capital and your profitability. And then finally, financial accounting software like QuickBooks and Xero is not really actionable. So it's not specialized in Amazon, it's not real time, and it's really kind of an overkill for some of the things that you need to be doing on a daily basis, like monitoring performance and profitability. So it's like deploying an aircraft carrier against a pirate rowboat, it's just too much. So it's super key for any serious business, financial accounting, but it does not enable, it's not sufficient for holistic financial management. And that's what we're going to talk about in detail later on. So to recap, it's key to understand what's going on with your financials. Achieving that understanding is easier said than done, and I'll help you kind of break it down into manageable pieces and understand how to stay on top of your financials throughout your Amazon journey. All right, so now that we've outlined some of the reasons why understanding your financials on Amazon isn't exactly a piece of cake, let's look at some specific mistakes or pitfalls that sellers make when it comes to financial management. So the first one is not understanding your profitability. It's absolutely key to everything. And guess what? Amazon doesn't have your cost of goods sold data, so they can't tell you how profitable you are. And I'm not sure you'd ever want them to know because they can always launch a competing private label product. So there's a fundamental misalignment between merchant interests and Amazon's interests. And so you have to figure out your profitability kind of outside of Seller Central. So one option you have is to rely on financial accounting software like QuickBooks. But really, it's not designed for sort of day-to-day profitability monitoring. It's just a bit of an overkill for that. It's not real time and it's not specialized on Amazon, so you really want something else. So Excel is a great option. You can crunch the numbers in Excel to figure out the exact kind of margins and return on investment and payback cycles on each product. But and I used it myself as a seller before developing Sellerscale. But Excel at the same time requires a lot of manual work to kind of put together these models in the beginning, and then to update the data to ensure that your formulas don't have any errors. And that's not something that everybody is comfortable doing or spending time on. So the real answer is that you need a dedicated piece of software that integrates with Amazon through their application programming interface and then does all this stuff automatically for you with a beautiful interface. And that's exactly what we've built with Sellerscale. So I'm excited to have at least some of you guys kind of test it out and let me know what you think. So the second mistake is launching products without digging into their unit economics. The stuff that I talked about in my cautionary story in the beginning of the deck. So most sellers estimate demand through Chrome extensions like Jungle Scout, but never really sit down to research and play with the unit economics of their products or the average per unit profitability metrics for these SKUs. And that's really, really key to picking the right products and optimizing your investment, essentially. So unit economics are very, very different across products, and you can typically estimate them quite well. So obviously you're not going to have perfect information, but you can approximate the unit economics of any given product with reasonably high accuracy. And then you can compare a bunch of products to each other and pick the ones that look best relative to the other ones. So when choosing new products, you have to look at a lot of candidates. And that's what larger sellers do. They have sometimes hundreds or thousands of potential product candidates with in-depth unit economics kind of mapped out. So do your due diligence. Don't get emotionally attached like I did with my first product, and just try to be as data-driven as you can. The third mistake is that people often ignore overhead expenses. So either to make numbers feel better or because there isn't an easy way to capture them, and so we just choose to ignore them altogether. And our minds are kind of sneaky in that way. If some task requires too much thinking, we often just rationalize it away. But we're trying to run a proper business here, so not play games. So you want to track every single cash outlay and incorporate it into your profitability picture. So marketing costs, if you're driving traffic off of Instagram or Facebook, you want to incorporate that. Office rent, software subscriptions, education materials or training courses are often very expensive. And other miscellaneous expenses, for example, buying reviews if you do that kind of stuff. So you want to keep track of all of that stuff. Even if it's kind of like small and relatively insignificant, you still want to apply that kind of systematic approach and diligence to the way you run your business. So it's just the right way to do things. And then larger sellers often run into a lot of complexity when managing their cash flow. So with every additional SKU that you add to your product line or your catalog, the cash flow management piece gets like almost exponentially more complex. And if you fail to monitor and plan and understand this cash flow dynamic, you might run into stockouts or fail to capture potential revenue and profits, or tie up your capital in slow-moving products with long payback cycles, or simply run out of cash and see your business die as a result of that. So really need to make sure to stay on top of this if this is sort of relevant given your scale. And the way to do that is you need to have a week-to-week cash flow calendar, essentially. So it can be a spreadsheet, and I'm actually going to share a free Google spreadsheet with you guys where I've implemented this cash flow calendar for my business a long time ago. And it lets you monitor your inventory, weekly cash requirements, inflows, outflows, planned out, outlays essentially to your supplier or freight forwarder or vendor, and really integrate all of that data across your products to understand, hey, what decisions I might need to make in order to ensure that I'm managing my cash flow properly. So for example, you could potentially want to raise prices on a certain product in order to slow down its sales and maximize its margins, so that you have enough capital to finance a replenishment order for a different product, right? So decisions of that nature. And if you're slightly larger and you have good numbers that you're confident in, then you may be bottlenecked by your working capital. And so at that point, you definitely want to explore financing options to accelerate your business, if that's the sort of limiting factor. So let's kind of quickly look at some of the symptoms of high quality financial management. What would a well-run financial management process look like? Well, first of all, you're crystal clear on current profitability. That's like imperative. Secondly, you track and understand all costs and fees and expenses. Money going out of the business, you have to incorporate it into the overall picture. You have a pipeline of new products for each of which you've dug into the unit economics, and you have a very data-driven kind of view of what upcoming what product candidates you should invest next into or use to replace a slower moving or less profitable product that you're currently selling. Then you want to understand your advertising metrics and their impact on profits. So how does the percentage of sales that you're generating organically impact your return on investment or profit margins, or advertising cost of sale? And these two metrics, the PPC percentage of PPC generated sales and advertising cost of sale, how do these two metrics in tandem affect your margins? And I'm gonna go pretty deep on how to do that down the line, so stick with me. And then you're in control of your cash flow and inventory dynamics, as we discussed, which is super, super key. And then what does bad financial management look like? What do we not want to do? Well, you don't want to run your Amazon business like the underpants gnomes in that South Park episode where they came up with this nonsensical 3-phase business plan. So Amazon is not a black box. You know the variables that play into your profitability. And so you want to make sure you understand them and what defines your profit and what levers you have to optimize that profit. So at the end of the day, you don't want to do and run your business based on guesstimates. You want to be as data-driven as possible. Never going to be perfectly data-driven, but you want to move in that direction. All right, so we've talked about some of the main pitfalls that sellers tend to run into when it comes to managing their financials. And we discussed what a high-quality financial management process might look like. And I mentioned a term several times that I haven't really defined yet, which is managerial accounting. So let's explore what it is, how it's different from financial accounting, and why it matters. Talking about financial accounting first, when people hear the word accounting, that's what they think of, financial accounting. And I'm going to go ahead and talk about it a little more and also argue that while it's great for reporting, it's not that useful for decision making. So financial accounting is a discipline that summarizes and reports on all financial transactions related to your business. And it's primarily used for filing taxes and informing external parties like investors and regulators, not the internal management of the company. Financial accounting is primarily concerned with two financial statements or reports, which are the income statement or the profit and loss, and the balance sheet. So the income statement shows, you know, top line revenue all the way down to bottom line net profit and everything in between, your costs, your overhead expenses, etc. And then the balance sheet is a point in time snapshot statement of your assets and liabilities. So assets are your inventory or accounts receivable, so money that's owed to you by, let's say, customers, and then liabilities is everything that you owe to other counterparties, for example, Amazon. And then the top, software products for financial accounting are QuickBooks and Xero, as you probably know. So there are two limitations of financial accounting that make it insufficient for our financial management needs. The first limitation is that it's designed for outsiders. So financial accounting statements are extremely standardized and they have to follow generally accepted accounting principles, such that any kind of business, be it a restaurant or an Amazon seller or something else, can produce the same exact kinds of reports that any external counterparty can then read and understand without having to kind of learn what they look like for every industry. And so this makes financial accounting reports not really suitable for internal business decision making because they're very generalized. They're not specialized to, let's say, the Amazon space, and that's what we need. And then financial accounting is not real time. So reports are compiled, monthly or quarterly. Taxes are filed only once a year, and then investment and lending activities and such are quite rare. So it's not real time. And is designed for periodic reporting and not continuous, which is exactly what we need to make decisions. So it's necessary and a must-have for any serious business, but is not sufficient for holistic financial management of our day-to-day operations. And the way to bridge that gap is managerial accounting, which is essentially real-time, Amazon-specific financial management in our case, right? So managerial accounting is a discipline that helps inform the company's internal management in whatever way they need to control the business and make good and timely decisions. And managerial accounting might look like, a piece of software that's, for example, integrated with Amazon like Sellerscale and designed for this particular industry. Or it might be a collection of spreadsheets and Excel models that you have built up for your own needs and customized for your business. So it's not as standardized as, financial accounting statements. And so the advantages of managerial accounting, as I said, are that it's real time. So a piece of software that's integrated with Amazon is going to pull in all the data in real time with very little delay. It's Amazon specific in our case, and that makes it actionable because we can immediately get access to the latest, freshest data and make decisions based on that data. So managerial accounting essentially consists of several key functions that are critical to managing our business. The first one is day-to-day business performance. So you need to really understand what's going on with your business at a day-to-day level. Then unit economics, which is, I'm going to talk about it in more detail, but is a key methodology essentially to understand the profitability of every single one of your products. Then you need to have the possibility to manage your expenses, to track and manage your expenses and understand your costs. And that's something that's also a function of managerial accounting system. You need to track your inventory and manage your cash flow. So combining all of these aspects into a single integrated system is what we want to have with a managerial accounting platform such as Sellerscale. So what this means for us is that managerial accounting is a really great tool to control our day-to-day financials and make better decisions. And it's actually a fantastic complement to financial accounting. So let's dig into each of these 5 functions of managerial accounting one by one and see how to leverage it to make better decisions. So first, you need to have some sort of a performance dashboard that displays all of the key business metrics in real time and lets you manipulate that data in useful ways. So selling on Amazon involves a lot of competition and various risks and typically pretty thin margins. So you absolutely have to stay on top of your key numbers as often as possible. To be specific, you obviously want to monitor your sales, regularly review all the fees that Amazon charges you, as well as overhead expenses that you enter manually. You also want to look at advertising metrics quite carefully, especially your PPC spend and your ACOS, but also the percentage of sales that you're generating organically versus with advertising. And so you want to combine the ACOS metric with the percentage of organic sales number to understand, on average, how much you're earning or losing for every unit sold. Because the more you sell through advertising, obviously, the more you have to pay Amazon. But this is a little tricky because you also need to look at advertising as an investment and not just a means of generating profit directly, because advertising, impacts your organic rank and therefore organic sales down the line. So you really do need to look at advertising as an investment. You also want to stay on top of your refund numbers and see how many refunds are coming in product by product and what as a percentage of units sold, what they are for each product, because that's clearly correlated to your product quality metrics, and Amazon can suspend your listings if you're getting too many defects and refunds as a percentage of sales. And then you also want to look at both your gross profit at the product level, otherwise known as your contribution margin for the product, as well as your business level operating profits that factor in overhead expenses. Now, naturally, Sellerscale has a performance dashboard, and so let me give you guys a quick demo and show what it looks like. Let's switch to the app. So here it is. And the way to take advantage of it is by reviewing your numbers on a regular basis to keep your finger on the pulse of the business. And so, what gets measured gets improved, so you want to review these metrics pretty regularly. You can start by checking your numbers for the prior day. So just hit this yesterday preset right here, and it instantly shows you all of the metrics for the previous day. So you can see aggregate numbers here at the top, including your sales, costs, and profits and margin, or product by product metrics here at the bottom, with not just your sales numbers, but also refund metrics, advertising KPIs or key performance indicators, and profitability numbers as well. Now that you've checked your metrics for the prior day, you can select a longer time period to get a sort of a higher level picture and look at some trends. So let's say we want to look at the last 30 days. The system instantly pulls up 2 charts, sales and profits on the left one. You can toggle any kind of data series on and off by just clicking on the legend over here. And then we've got our advertising metrics on the right with ACOS and PPC spend, as well as total ACOS, which is a very important metric actually. So, and then you can click on the tiles at the top. If you click on the sales tile, for example, you'll see the breakdown of your sales between organic and PPC. And if you click on the cost tile, you'll see a full end-to-end list of all the costs and Amazon fees that were incurred during the selected time period. There are also a number of other details that make it easy to manipulate the data in useful ways. So, you can select any custom time period. You can also use this group by parent button to collapse products and only show your parent ASINs, or all products, including the child ASINs. You can group data in the charts in a way that's most kind of conducive to analysis. And then in this table at the bottom, you can sort the data by any column, ascending or descending. You can, search for products in real time if you have a lot of products. and then you can customize the table to show or hide specific metrics that you need or don't need. So in just a few minutes, we got a pretty comprehensive overview of the health of our business. We know whether it's profitable, whether sales are growing, our advertising efficiency, and which products are doing well or not so well. And you want to do this on a regular basis so you can make sure that everything is functioning smoothly. So now let's get back into our presentation and keep going. All right, so now let's dive into my favorite part of the webinar and talk about unit economics. This stuff is super important, so stick with me. Unit economics are essentially the fundamental financial building blocks of any business, and they represent your average revenue, costs, and profitability on a per unit basis. So visually, here's what it might look like. And this is actually a spreadsheet that I built for myself a long time ago and then turned into a web application that became Sellerscale. And I'm going to share this spreadsheet with you guys so you can play around with it and then compare it with Sellerscale's built-in unit economics tool, which is essentially an automated and highly optimized version of this spreadsheet. So this tool lets you analyze your current per unit profitability of the products that you're already selling, right? That's one way you can use it. But then also you can take advantage of it to research potential new products and make a list of products that you're evaluating and essentially dig into their numbers and have a much better understanding of those numbers over time. And the real kind of superpower of a unit economics tool like this is that it lets you play with different assumption variables. For example, your sales price or your ACoS or your sales velocity. And then you watch how these changes impact your profitability, and through that gradually improve your understanding of the underlying financials and make better business decisions. So that's really the high level idea. And now let's dive into the actual unit economics tool in Sellerscale so I can show you guys how this works in practice. So let's switch to my browser so I can show you guys the app. And here's what it looks like. So it's essentially a spreadsheet that aggregates all revenue and cost data for each product and shows average profitability for every unit sold. And it lets you do two things. So first of all, you can check your current per unit profitability. To do that, you just click the Set to Actuals button, select the needed time period, let's say 30 days, and the tool instantly pulls up your data from Amazon for that time period and sets all of these numbers to actual values. So here we see that our average price for product one was $17.3. Daily unit sales were 4.3 units. So again, this is an average over 30 days, so it might not be an exact, integer number. Our advertising cost of sale for this product was 30%. And the PPC share of sales, or the percentage of sales that were generated by PPC advertising, was 10%. Okay? We can also expand this section in the middle to see all of our costs. The unit landed costs we input manually, and the rest of all of your costs, the Amazon fees and the PPC costs essentially, are all pulled up automatically. And then we have our profitability metrics on the right over here in this section. So we have our margin, ROI, return on investment, our payback period with a long formula, but it's actually just the number of months essentially that it takes to recover your initial investment in the inventory, and then your monthly profit and monthly revenue. Okay? So this is super useful because you can instantly get an in-depth understanding of the state of each product. And let's say you're running out of stock on product one and need to decide whether to commit another $10,000 to this product by placing an order with your supplier. Well, now you have a much more granular understanding of this product's current profitability, and you can make a higher quality decision essentially. So not only do you now have, aggregate profitability data about this product by looking at the dashboard and maybe some historical figures, but also unit level kind of profitability, ROI, and all the other inputs and outputs. But here's where it gets really interesting. So a second way you can use this tool is a little more advanced, but it's extremely powerful. It's called sensitivity analysis. So the idea is that you can play with any of these inputs as well as the unit landed cost and see how your profitability metrics on the right respond. And by doing that, develop a much better sense of how compelling each product is, not just today, but potentially in the future. So let's go through a couple of examples to kind of illustrate. Let's say you want to understand how a $1 discount from your supplier would impact your profit margin and ROI, because that might help you decide how large the order should be. To do that, all you have to do is adjust the unit landed cost value downward by $1, and you instantly see how much of an impact it has on your key metrics. So your margin goes up by 5.8%, ROI 55%, payback period goes down, and monthly profit increases by this amount. So isn't this cool? Or say you're thinking of running a promotion where you sell 2 units a day at 50% off, and you want to estimate how that would affect your average profitability per unit. Really, really important to kind of think through that before giving significant discounts, and that's something that most sellers never do. So we have 2 additional columns over here, daily promo sales and promo discount, and we just put in 2 units per day at 50% off, and immediately we see how large of an impact this has on your profitability and how expensive it is to do aggressive giveaways like that. Another thing you can easily do is find your break-even point. So what is the lowest price you can sell at so you're not losing any money nor making any, right? So to do that, you just select the needed product, let's say product 1, and then in the actions menu, choose find break-even point by sales price. And our system instantly sets your sales price to a level where the margin is equal to 0. And this is really useful because now you know that this is kind of like the floor in terms of the price, where you're going to be kind of bleeding money on every sale if you go below that. You can also find your break-even ACoS actually. So same way, just select the needed product and then find break-even point by ACoS. And here we set the ACoS to a level that makes your margin 0, given that all the other kind of inputs are remain the same essentially. So you know that this is the highest kind of allowable ACoS at the current price level, etc., that would ensure that you're neither making any money nor losing any. Let's look at another example. So say you want to better understand how your profitability depends on the percentage of sales that you generate organically. Super important kind of thing to understand and have an intuitive sense for. So we have a column here called PPC share of sales, and it essentially shows the percentage of sales that you're generating through PPC advertising. And you can play with this number to simulate various scenarios. So let's say we want to see how profitable this product can be if all of its sales are organic. Just put in 0% over here, and we see that it has a really high ROI and payback of only 1 month, which is kind of insane. So we see how profitable the product can be if it's so good that you're selling everything organically. And then let's simulate the opposite scenario. What if all of our sales are coming in through PPC ads? And we see, again, that the profitability profile of this product drops substantially if you do that. Okay, and let's go through one last example here to really just drive the point home. Let's say you just launched this product 1, a few weeks ago, and it's still kind of ramping up. So maybe you've lowered your price to kind of be a little more aggressive and get more clicks. Your sales are low, and all of those sales are being generated through PPC, or let's say 90%. And then you're not very efficient with your advertising. So let's say you have a 80% ACoS. So we see that this product is deeply unprofitable, and you're losing $400 a month in profit at the level of sales of 2 units per day. But this is not really what you care most about. You really care most about the steady state profitability potential of this product after it ramps up. So let's say that your competitors are selling at $30, and you can kind of be in line with them in terms of your pricing, and you can sell maybe 10 units a day. You can reduce your ACoS somewhat, let's say 50%, and generate 70% organically, 30% through PPC. We see that under these conditions, the product is extremely profitable. 340% ROI is unheard of, basically, and that you're making more than $3,500 per month in contribution margin or in profit for this product. So this might inform you that, hey, maybe I should be way more aggressive during the ramp-up phase and increase my bids, lower my pricing even more, because the product just has such insane potential. So isn't this cool? This is super actionable kind of analysis and could really give you an edge over your competition. And it doesn't take being a certified public accountant or a pro in corporate finance to run this kind of analysis, especially now that you have this tool that automatically can pull your actual data from Amazon, where you don't have to download reports and integrate all of that data in Excel, etc. So I think this is really, really cool. And so far we've looked at our existing products, but you can also apply this to potential new products. So we have a little product tracker here, which is a similar table, and you can add products here either manually, or you can use our Chrome extension, which adds products from Amazon and calculates their FBA fee automatically in just a single click. And then you can, over time, accumulate a pipeline of products that seem interesting, play with their numbers, simulate various scenarios, and see which ones have higher profitability potential, essentially under similar conditions. So this is really, really actionable because, as I said, serious sellers have significant sort of long lists of potential product candidates that they're constantly looking at, researching the numbers, playing with the unit economics, and then launching new products in a very data-driven way. So let's go back to our deck. And that's unit economics. So hopefully this was kind of interesting and helpful. I think it's super cool. And this is really what got me into the project of building Sellerscale, because I implemented that unit economics model in Excel to help me run my own business. And then after seeing how indispensable it was over time, I decided to turn it into a product and share it with other sellers. So, play around with it and let me know what you guys think. I've listed out the questions that we went through during our analysis on this slide, but you guys can always come up with other kinds of questions to dig in even deeper and expand your understanding of the profitability and unit economics of your products even further. But the key thesis is that every product is an investment, and you need to ensure that you're getting a return, a financial return on every investment to the best of your ability. So literally every time you need to make a keep launch decision, whether to order another batch of an existing product or to launch a new product or not to launch, your knowledge of profitability, your intuition about the profitability of every product becomes extremely important. So you really have to kind of work on ensuring that that intuition is driven by data as much as it's theoretically possible, because we're never going to have perfect information, right? So it's a continuum in terms of how data-driven you are. You're either taking a complete guess, and I assure you there's a significant double-digit percentage of sellers that just guess when they launch new products. Or you have, on the other hand, perfect information, which is a theoretical kind of state. You can't ever get there, but you want to aim to be sort of much closer to the perfect information end of the spectrum with your decisions. And for that, you need to run through essentially financial analysis and understand your unit economics and do the kind of stuff that we kind of went over during the previous demo of the unit economics tool. So now I would like to talk about inventory management real quick. And we're not gonna go super deep on this, because inventory management can get pretty complex and it will take a lot of time to dive into it. And there are entire dedicated software products that only focus on inventory management. But some of the basic things that I'll touch on are, monitoring your stock levels, calculating sales velocity, and knowing your lead times, and knowing when to place your replenishment orders for optimal results. And again, I'm going to use the tool we have in Sellerscale to demonstrate, but you can easily implement this kind of functionality in Excel if that fits your needs better. And here it is. So in green, we have our stock levels. So available is essentially what you have in the fulfillment center that can be fulfilled right now. FC transfer is what's in transit between fulfillment centers. Inbound is what's sort of en route to Amazon. And additional is for whatever inventory you might have, perhaps in a different warehouse that you can kind of update, manually. Then we automatically pull up these three values over here. Then sales velocity is your average daily unit sales, essentially, and we calculate it using an average over the past 2 weeks. Lead time is how long it takes you to manufacture and deliver a batch of product to the warehouse, and you can adjust this from this edit menu over here very, very easily. Okay, and then your reorder point is essentially the level of inventory at which you should place a new order in order to avoid a stock out, right? Days of inventory is exactly what it sounds like. It's how many days you have of inventory remaining, and then time to reorder is how many days you have until you need to reorder to essentially, again, avoid stock out. And then we also have this feature here called the safety buffer. So essentially, it's a percentage value, and we basically increase the reorder point by this percentage in order to stay on the safe side and minimize our chances of a stock out. That said, you don't want this to be too high, so 30 or 40 or 50%, because then you will order too soon and will end up with excess inventory and storage costs. So inventory management is always a game of balancing your probabilities of stockouts, right? Because that's gonna prevent you from earning revenue that you can earn with your sort of storage costs and excess inventory. So you want to avoid excess inventory as much as possible because it costs money. So that's essentially it for inventory management. Another important activity we need to perform in managerial accounting is expense management and profit and loss analysis. So as I mentioned before, you always want to keep track of all the cash that's leaving your bank account. Even if it's small expenses, it's just good financial hygiene, so to speak, to keep track of them. And I'll show you how we support that in Sellerscale, but you don't have to use our product. You can track your expenses in Excel or a different app. I'm just using our product to kind of illustrate this stuff. And then related to that is P&L reporting. You want to frequently review your profit and loss report, look for patterns in the data, and use that to really stay in control of the business. So let me give you guys a quick demo once again. Let's first look at the expense module. So this tool lets you easily create new expenses. And let's create a QuickBooks expense to illustrate. So it's a software category, it's recurring. We started using it, let's say, a couple of months ago, and the cost is $100 per month. We create it, and the system instantly replicates it in time, the correct number of times, and accounts for it in all historical profitability reporting. We also automatically create an expense item for your Sellerscale subscription, which I thought was kind of funny to implement as a feature. Now let's look at the P&L. So the P&L is essentially your report that shows top to bottom financials for a given year, starting from your sales or revenue all the way down to gross profit and net profit. So to get to gross profit, you subtract all of your direct expenses, like cost of goods sold, Amazon fees, PPC costs, and then to get from gross profit to net profit, you want to subtract your overhead costs, which might not be directly related to particular products. And then net profit is technically earnings before interest and tax. So if you have tax, you need to kind of incorporate that to get to your real bottom line net income. And the thing you want to do here is, well, first of all, you can select any particular year over here, and you can also choose any specific product as well as all products if you want to look at the business level profitability. But the way to kind of analyze your P&L is to really to look at product by product numbers and probably, excuse me, not just months, but weeks as well. So we have a weekly view here, and you can literally just take a look at your kind of sales dynamics for a given product week over week and make sure that things are going smoothly and the numbers are where you would expect them to be. You can also look at your cost of goods sold and any other line item to kind of just track what's going on with numbers. If there's any kind of weird, overly significant, numbers for a given week, you can dig in and understand what's going on there behind the scenes. And then you can also switch this report into percentage format. And this is, let's just go to months to make it more convenient. And this is a very interesting kind of type of financial analysis called common size analysis. So it expresses sales as 100%, and then every other line item is essentially expressed as percentage of sales. And this really lets you easily identify useful patterns in the data. For example, that your, a certain Amazon fee, for example, is increasing or decreasing significantly as a percentage of sales, and that might be indicative of your improving or deteriorating capital efficiency, let's say, or some new fees that you weren't aware of. So switch the report to percentage view and then go product by product as regularly as you think is necessary. Look at the business as a whole also, because that's clearly important too. And by doing this kind of repeatedly, you will just stay in control of your business and ensure that there aren't any kind of unanticipated expenses or significant cost items that you haven't investigated. And so you can react more quickly to changes in the marketplace. So finally, we're at our last critical function of managerial accounting, which is cash flow management. And here, the basic idea is, know how much cash you have on hand available for your business. Definitely set up a dedicated bank account so you're not mixing personal and business expenses. Anticipate your cash needs for every SKU and understand how much cash each product is likely to contribute, otherwise known as your inflow rate. And then set up and maintain some sort of a cash flow calendar to help you plan your vendor payments, inventory replenishment, and just make sure you don't run out of capital. So we don't have a tool to manage cash flow in Sellerscale just yet, but I have a spreadsheet that I built for my own business a while ago that I'm going to share with you guys, and you can kind of use that or at least take a look at it to get a sense of what these things might look like. So let me hop over to Google Sheets, and here it is. So it's a little complicated, and you will have to kind of spend some time to get comfortable with it. I haven't been maintaining the spreadsheet actively, but I'm going to kind of give you guys a high-level overview so you get a better sense of what this stuff does. So first of all, we have months here and weeks in the second row. So you really want to kind of monitor this stuff, your cash inflows, outflows on a week-over-week basis. I found that to be the most kind of useful way to do this stuff. And then the first section here is your beginning cash for every week, and then how much cash you're gonna generate or lose for that week because of your product contribution, which could be negative, as well as your overhead costs, essentially. And then what that sort of leaves you with at the end of the week in terms of your cash. So that's really why we are making this model and trying to monitor this stuff in order to make sure that we don't run out of cash. And then below, you essentially have your product by product sections, which are kind of larger and a little more complicated. But essentially, you have this one section that's standard, and then you replicate it for every product that you might have. So yeah, this model could get quite heavy, but at the end of the day, it's pretty useful. I found it to be pretty useful to help me stay on top of my cash flow. So let's go over some of these rows here. We start with inventory, your beginning inventory at the beginning of the week, and you can put it in manually. Then we have daily sales, average daily sales for the week, and you can update this figure based on expected seasonality, or maybe you're planning to increase your price and you expect it to drop your daily sales by a little bit. So you just basically put this in manually, and you can update it in sections essentially, because this model, this line basically feeds on the prior cell here. So whatever you input here is going to propagate throughout the rest of the model essentially. Then we have your ordered inventory, how much inventory you've ordered, if any, in the given week, and received inventory. So received inventory is automatically set up here to kind of occur, I think, 8 weeks after you order your inventory, based on like the average lead time, or a little more than that, 10 weeks. But you can change that yourself. And then we have ending inventory, basically here at the bottom. So if you received a bunch of inventory in a given week, your ending inventory will be, or your beginning inventory next period is going to factor that in. Then we have your inflows. So what cash comes into your bank account from this product based on essentially your average sales price, your daily sales, and then your inflow percentage. And the inflow percentage is essentially your sales price minus the fees that you pay to Amazon. So your Amazon fees as well as PPC costs. So Amazon subtracts those before disbursing the cash back to you, and you essentially, if you get $3 from a $10 sort of sales price, then your inflow is 30%. And you still need to pay from that $3. You still need to kind of account for cost of goods sold, but we care about cash here, not profit. So this is your inflow percentage. And so the total inflows for the week has a pretty simple formula here that looks at your daily sales for the week and inflow percentage and sales price once again. Then we look at your outflows, right? And outflows are your unit production cost, shipping cost, unit other cost, so packaging or marketing inserts. And this stuff only becomes relevant if you've ordered inventory in this period. And we essentially look at the deposit, the 30% deposit that you send to your manufacturer as soon as you place the order, right? Because we've placed an order here for 1,000 units. And then a couple of weeks later, so like a month later, we have the remainder of that payment due at 70%, and so that's when we incur this outflow. Then we also have shipping charges, which occur a little after your manufacturer finalizes the production run, essentially. And other costs are sort of incurred. We're assuming that they're incurred as soon as we place the inventory order. So maybe these are, again, marketing inserts or brochures. This gives us total outflows, and we can add up the inflows and outflows to get our net inflow, essentially. And net inflow is what impacts your cash balance in this week, right? So this is basically it. So you just want to make sure that you plan out for every, and so these numbers here are aggregate. They summarize, they add all of the net inflows essentially from every product that you have in this list. But yeah, you just basically want to reflect when you're planning to order inventory for this product or some other product, and ensure that your kind of projected demand is as accurate as possible. Your prices and all the other metrics, your inflow rate, are all kind of in line. And yes, this is a lot of variables. You're not going to get this perfect, but it's better than doing nothing, and it's actually pretty helpful to when planning your kind of your inventory replenishment and seeing that, hey, I might be possibly running out of cash in the first week of April here, or at the end of March. So I might want to place an inventory order later, or earlier, or place a lower volume order or something like that in order to avoid a capital crunch, essentially. So this is sort of a high-level overview of the cash flow model. I hope this was useful, and I understand that there's a lot of detail here, and you're going to have to play with it to kind of get a better sense of how to use this tool. But I'm going to share the spreadsheet with you guys, and hopefully it comes in handy. So that concludes our webinar, and the main takeaway is that holistic financial management requires both financial and managerial accounting. A lot of sellers know that financial accounting is important and that you need to have a QuickBooks set up and potentially outsource your financial accounting work to a professional, but very few merchants realize that managerial accounting is just as important, is an excellent complement to financial accounting, and that you really need to understand what it is and how it works and why it's important for the business. So as promised, here's a special offer for you guys, 75% off your first 2 months after the free trial for Sellerscale if you decide to go with our product. You don't have to. You can do managerial accounting in Excel or using other financial apps for Amazon sellers, but I think our product is the best, and I'd love for you guys to give us feedback and share your thoughts on Sellerscale. So to get the discount, you just need to register at sellerscale.com, log into your account, integrate your Amazon store so we get all your data to show up in the system, and then you just apply coupon webinar752 in the app. It's super simple. So again, thank you guys for listening, for putting in the effort to go through this webinar. It really speaks to your propensity to be data-driven and willingness to learn. And if you don't feel comfortable working with numbers, it's okay. You can get better at it. Just have a growth mindset and put in the time to practice. We're going to share the resources that I mentioned previously with you guys in the webinar room right now. So you should see several handouts pop up on the right. And if you ever have any questions, feel free to email me at paul@sellerscale.com. Would love to hear from you guys. And I wish you the best of luck with your business. Take care, guys. Ciao.